Welcome to the daily update, where I'll go over the action in the market for Wednesday, August 16th, and then we'll see how things look for Thursday, August 17th. You can probably tell right away that I sound different and the screen might look different. I seem to have really injured my right arm, and believe it or not, where I experience the most pain is when I try to work the mouse. I did prepare all of the slides for the video, and those will be uploaded and available in the description below the video, but I'm just not able to work the laser pointer for the slideshow or work the mouse to be able to edit the video. So this is going to be a one-off video. You're going to get all my mistakes, my flubs, my pauses, all of that stuff all together. It'll probably be this way for the next few days. So I won't really be doing a long version of the video, and I won't be doing a short version of the video. I'm going to kind of merge them together and then do this all in one take and then upload that because we have a lot of things happening in the market. Before we start, I am offering a free online course at some point in September. I haven't set the dates yet. The reason for that is I have an on again, off again commitment on Thursdays, which would be during the time that we're thinking of having the course. I'm waiting to find out if that on again, off again commitment, what days those are going to fall on in September, and then I can set the dates. Or I can also look at changing the days to Monday, Tuesday, Wednesday. I thought about Tuesday, Wednesday, Thursday, because, people take Mondays and Fridays off in the summer. And I just thought that might work better for people trying to access it. Also, be aware that it will be recorded. So even if you want to attend and something comes up, or you want to re-watch something, the recording will be available for you. So let me know if switching to Monday, Tuesday, Wednesday is okay. I do plan on doing 2 classes. The one will be Monday, Tuesday, Wednesday, and that'll be about an hour long each. The other one, I haven't set the date yet. That'll probably go all 3 hours in one shot. So you kind of have your pick, or you can come to both. That would also be great if something like that interests you. I will be covering my own approach to technical analysis. It's a little bit different than what some of you might be used to, and you might find it interesting. I'll also be going through just some basic strategies that you can implement, as well as covering support and resistance. And it's looking like with the 3 topics, I'll spend an hour on each one, either for the full-length class or for the 1, 2, 3-day class. All right, let's go back and talk about what happened. We are going to just go through the comments right here. The S&P did try to get up to its 50-period simple moving average. It calculated as of Wednesday at 44.49, but now that's acting as resistance. I'll show you the intraday chart. The daily pivot was right about at this level, and that's where we topped out in Wednesday's session. We did get the FOMC minutes that came out, and there was a little bit of gyration right after they were released. There was a headline that said most participants continued to see significant upside risks due to inflation, which could require further tightening of monetary policy. But we've kind of known this already, and the market's already working through this as we've been getting economic reports that have been stronger than expected lately. And so they're projecting that interest rates are going to go up, and that's pushing bond prices down, which makes interest rates go up, and it's having an impact on stocks by pushing them lower. So really, this wasn't all that surprising. Interest rates do continue to climb, and that's what is putting some pressure on stocks. On a short-term basis, we have the Stochk RSI, the Williams percent R, the CCI 14 and 20, as well as the stochastics. They are extreme negative, or you could start to suggest that maybe we're oversold in the short term. In the intermediate term, we have a new addition to the list. There's the S&P McClellan oscillator, and now we've added the NYSE McClellan oscillator. Again, extreme negative readings, not necessarily oversold, but you could start to see that as you look through the charts. And also we have a couple of different areas with our PMO studies that are looking extreme negative. The dollar was up and interest rates were up, and both of these together are putting some real pressure on stocks. All of the yield curves that we follow are still inverted. We've dropped down to neutral now as far as sentiment, where we're at 52. We had been at 56. Our trend is turning more negative. The red line is going above the green line, both on the short-term ADX and on the intermediate-term ADX. But especially for the intermediate-term ADX, we're still below the moving average, suggesting that the trend is weakening. But as long as we're above 20, we are still in a trend. Our bias is negative and our momentum is negative. That has not changed. The economic reports that came out, and I'll just go through the list. I won't have the charts to show you. The weekly MBA mortgage applications index came in down 0.8%. Refinance applications were down 2%, where purchase applications were unchanged. Total housing starts, where this can be a leading indicator of the economy, they were up 3.9% month over month. If you roll that out to an annual rate, that's 1.452 million units, a little bit more than the 1.446 million they had expected. Building permits, also a leading indicator. They were up 0.1% month over month. Annually, that's 1.442 million, where they expected 1.460 million. A little bit less than that is what we got. Industrial production was up 1% month over month. They expected 0.3%. Last time it came in down 0.8% on an annual basis. That puts us up at 0.2%. Capacity utilization, which is now below 80. That means companies aren't really working at their full capacity right now. We came in at 79.3. They expected 79. Last time it was at 78.6. Here's the intraday chart, and I can use the mouse here, where I'm unable to do it on the other computer that I record on, where we had a higher open, but we just topped out. Oops, here we go with the one take stuff here, where we topped out right at the daily pivot. We hit that level. We tried to hit it 3-4 times. We just were not going to go any higher than that. So then we fell back down to the unchanged level. It fell below that. We came down to S1, which tried to provide support. We came back up to the unchanged level, which now acted as overhead resistance. We then fell down back to S1. We came all the way down and closed just above S2. Here's the growth to value ratio, where it was looking good off the bat, where we were spiking up and then spent the rest of the day coming back down, and we closed just about at the unchanged level. We're kind of keeping an eye on this. When growth is outperforming value, even on a down day, that can suggest that the smart money is going in and buying these growth stocks, which are the stocks that you want to buy low and sell high. This is becoming a little bit of a concern. It's been a concern for a while now. This is the equity put call ratio 5-period simple moving average. And we've been going up as the market's been going down, and that's usually what happens. But we're starting to get to this extreme reading. If we continue to go up, spike, and then come back down, that could suggest that we're hitting a bottom in the market. If you look at other times when we really spiked up and then started to come back down, that often marks some kind of a bottom. We're also keeping an eye on this, the smart money. What are they doing? Well, on Monday, we thought things were improving when we look at the accumulation distribution, but now we're still seeing continued weakness as they are selling into this market. Keeping an eye on our trend. This is the intermediate term ADX, where it is declining. It's below its moving average, but it's above 20. So we're still in a trend, but it's a weakening trend. The red line has now crossed above the green line. So if we default to anything, it would be to the negative trend. In the short term, we're actually in a trendless environment now. We've dropped below 20. We're below the moving average, but the red line is on top. So in the short term, we're trendless, but we would default to the negative side. Looking at the daily chart, where we've now broken down below the 50-period simple moving average. And on the bottom, you can see where volume is still well below average. Looking at our other moving averages, we've dropped below the 50 now. Are we going to go all the way down to the 100s? Now, there's other moving averages that you could plot on here, but most folks tend to use the 50 and 200. I started using the 100-period moving average when we would go in sideways markets for the most part, and sometimes that can be very helpful. Right now, it's the next line of defense as far as moving averages based on this chart. Here's an extreme negative reading that we're seeing. It's the S&P 500 McClellan oscillator, where we dropped below this level. Now, we could still go further than this, but if we do come down and start to go back up, sometimes that can mark a bottom in the market. So this calculates over into the summation index, where we're declining based on price and volume, and we've dropped below zero based on volume. The NYSE McClellan oscillator also starting to go extreme negative. It could go further, but once we bottom out and start to come back up, that may signal some kind of a bottom in the market. So then that calculates into the NYSE summation index based on price, which is declining, and based on volume. The Chaikin money flow, which also it tries to measure what is the smart money doing. We thought we were seeing some improvement after Monday. Nope, we're seeing a lot of selling. But at the same time, you notice we're getting to kind of an extreme reading here, where at least in the short term, because this chart only goes back about a year, we got down to about this level where other times it marked a bottom. So there's a potential that we could be getting to the point of hitting some kind of a bottom in the market. Our Ichimoku cloud, we're coming down into the top part of this green cloud. Sometimes this cloud can provide support when we're coming down. We'll have to see, are we going to go further into the cloud, or is this going to provide support and we're going to bounce up off of that? Also keeping an eye on our trend line study, where we broke below this intermediate term trend. We're now kind of in no man's land as far as this is concerned, and we're dropping down, and we may come all the way down to this other trend line if we continue to see more weakness. The Dow finally broke below support of this pivot level, and it's dropping down. Will it finally come down and test its 50-period moving average as well? We're keeping an eye on the NASDAQ 100. The PPO is starting to drop below zero. Last March, we came down, and here's March. We came down to this point right here, right about at zero. We hit a bottom and then saw a nice up move after that. Is that going to be what's happened? Is that going to be what happens this time as well? But we are showing that the momentum continues to be negative for the NASDAQ 100. Keeping an eye on the bullish percent index for the NASDAQ 100. I pointed this out yesterday. It looked kind of positive on a down day where the BPI was sideways. Well, we're continuing to decline now. The small caps also breaking below the 50-period moving average. Are they going to come down to their 200-day moving average? That's the negative side. On the positive side, we still have a recent golden cross. Looking at the mid caps, also breaking down below support. We came below the 50-period moving average, and we're just a little bit below this S1 level. They've already come below their 50 moving average. Are they going to come down to their 200 moving average? And then longer term with the weekly chart of the S&P, we're dropping further below this resistance line, which could be longer term negative. We're seeing pretty much that same thing with the NASDAQ 100, dropping a little bit below this resistance line now. Longer term, and I don't always bring this up in the shorter version, this is a very long-term chart. It's based on weekly prices, where we take a ratio of the NASDAQ 100 to the Dow. We're getting, and you have to get my clearing my throat and all that stuff. When we got to a very high level last time, that was in the year 2000, and then we saw the whole dot-com bust after that. We took 20 years to get back up to where we were. The last time we hit this same reading in the ratio was at the end of 2021, right before we went into a very difficult 2022. We're coming up to this level. We didn't quite get to this level, and now we're continuing to come back down. We're wondering, if this continues to fall, is that going to be negative for the market? Now, on the other hand, we could see things turn around and go back up. We never did reach this high level that we saw last time. Maybe we're going to go back up and at least try to hit that level. We'll just keep watching this. Then, according to Tom Bowley, August is the third worst calendar month for the year, but we're supposed to be in a favorable time right now. Based on his research, in the middle of August, he usually has positive returns. We're also seeing that later on with the Stock Traders Almanac charts. They also suggest that historically we've seen a bounce about now. We're just not seeing that based on price yet. And he also suggests in here that from May to August are typically the times when we see growth outperforming value. Yeah, they're in uptrends compared to value, but we're not really seeing any strong outperformance that's happening right now. So what's our outlook for Thursday? There will be earnings reports that come out, but they are slowing down a little bit. The technicals are negative and we're below the 50-period moving averages. We will be getting the weekly jobless claims, the Philadelphia Fed index, the leading economic index. We used to not pay attention to this very much. Now we do, because even though parts of this indicator are known before it's even released, it really does lead us going forward, and it's been showing a lot of weakness, suggesting that we may go into a recession. We'll have to see if that continues. And then we're keeping an eye on the geopolitical events, but for the market right now, it's about inflation and interest rates, which are producing growth concerns. Excuse me. I can't edit the video when I record it this way, so I ask your forgiveness in advance. Here's the economic calendar that's been updated for the week so far. We will be getting the LEI on Thursday. There won't be any reports coming out on Friday, even though you can't see that. The Stock Traders Almanac statistics. We are positive across the board historically when you take all the years together, both for the Dow, S&P, and NASDAQ. And then just looking at the presidential election cycle, where we should be seeing some kind of a bounce from here. We're just not seeing that yet. We're also wondering, is the NASDAQ finally going to bottom here in August and see some kind of a bounce up out of that? We're just not seeing it yet. Then looking at the S&P with pre-election years, we follow the green line where it does show historically there's a nice bounce right about now. We just need to see follow through based on price. We will be on the 13th trading day of the month, and then looking at the next chart, from the 8th trading day to the 13th trading day, we tend to see a bounce. Well, we're hitting the 13th day now, and have you seen much of a bounce other than Monday, but we gave all that back on Tuesday? Maybe it'll just be delayed a little bit this year, but in the meantime, we're still more negative overall. So what about our scenarios? We are negative right now. The technicals are negative. We're pointed down. Again, if you want to see all of the charts that I usually go through, it'll be in the PDF below this video in the description. So we are negative. We're going with that scenario. We can't go with the up one now. It's really dangerous to try to front run the market. It's like stepping in front of a moving train or trying to catch a falling knife. In the short term, you could go more with the sideways trend because our ADX is below 20. I don't know if a lot of you do a lot of short-term type positions that benefit when we go sideways, but if anything, you would probably default to the downward trend because the red line is on top with both of our ADX charts. So the warning signs, we did see a convergence of these short-term bearish signals. They all came together. We hit that upper resistance about 3 weeks ago now, and that's been what's really pushing the markets down. The longer term trend signals, the weekly chart of the S&P and the NASDAQ 100, they may be signaling that we're at a top. We're below those resistance levels. Seasonally and historically, August is a weak month, but we're supposed to be coming into a positive time. Our oscillators on the S&P 500 are all negative across the board. We are negative with the NASDAQ 100, but as we get down to this zero level, we're going to be watching that to see if some kind of a bottom is put in place. The VIX is continuing to climb. It had been showing a lot of complacency. Now it's really starting to go up, producing more fear in the market. The equity put call ratio is starting to spike. We're not quite at a real extreme reading yet, but we are going up, and so we'll be keeping an eye on that. The S&P, NASDAQ, and NASDAQ 100 are below their 50-period moving averages. You could also add the small caps and the mid caps. The only thing that really hasn't tested its 50-period moving average yet is the Dow. The cumulative new highs, new lows for the NASDAQ are showing weakness. The 3-month yield is still above where we were back in 2007. The last couple of days, it's been unchanged, but it's still above that 2007 level. What we're waiting for there is if we turn and start to come back down, that's what happened right before the great financial crisis. If it does start to come back down, is that going to give us a warning sign? S&P 500 growth is weakening, but it's still in an uptrend. The parabolic daily and weekly charts are negative. The vortex is negative, and all of our other indicators are pretty much negative right now. And then we're dealing with earnings season, which can be positive or negative. The positive signs, and I went over this in the weekly video, the seasonality and setups, they are still in the background. The daily special K chart is positive, but it's rolling over. The weekly chart is still negative. The longer term equity put call ratio, it is positive, meaning that it's declining, but we're starting to see that turn up. We don't know if this is just a little bit of a hiccup or if it's really going to turn and start heading up again, which could be negative for the market. The S&P remains above the downtrend channel upper line. We're still far away from that line, so I haven't been including that chart. The posturing that we're showing right now has been risk on, meaning that stocks are favored over bonds. And in the intermediate term, we're still doing okay, but we're seeing a short-term decline with that ratio. The S&P is outperforming utilities. The staples to S&P 500 ratio is declining, and both of these together are supposed to give some support to the S&P. We're just not seeing it. The Russell and the small caps, as well as the mid caps, are working off, excuse me, they are working off of recent golden crosses that have been generated. Small and mid cap growth continues to be positive. The financial sector has generated a recent golden cross, even though it's been getting hammered over the last few days. So our conclusion, we are negative and we're below the 50-period moving averages. In the short term, we're negative. You could make a case that we're oversold, but we could still decline further. In the intermediate term, we're negative and we're slightly oversold. We still could fall further. And then long term, we continue to be positive. So thank you. I hope you found this helpful. I'm probably going to have to do this for the next few days, maybe even the weekly and intermarket analysis videos. It's just too painful to try to do it the other way for right now. So I hope you have a really good day, and I will talk to you in the next video.